Hi, welcome to my channel. My name is Hugo, and today we're going to see what's the best 5 stocks for this week. And at the end of the video, we're going to see my portfolio performance, so stay around. So I'm starting with AGNC, American Capital Agency. This is a diverse financial and it's on the mortgage rates industry. This is one of the ones that I've picked for this week for one simple reason, not only because the ex-dividend date is going to be on the 28th of January, but also due to the information is coming out from the Biden government, which is going to be increasing the investments on the REITs. So this is one of the interesting assets to have on our portfolio. And since it's a monthly dividend, we have quite assurance that if we decrease somehow, we can sell the next day and you won't have any impact and waiting for the 4 months of dividends, because it's a monthly and we don't need to wait for each quarter. So this is what I like on this. This is undervalued in 21%, beside the fact that it's being increased in the past few months, as you can see on the graph. But financial health is quite bad. It's BBB, bad, bad, bad. But we need to have in consideration one thing. This is a financial REIT, it's a mortgage REIT, so usually they have more liabilities than assets. So the assets, it's around 11 billion, and in terms of liabilities, around 69 billion. But bear in mind, they borrow money. So in the long term, I'm not seeing this in the short term, I'm seeing this in the long term. And in terms of revenue and equity, has been quite high in the past few quarters and every single month. So taking this into consideration, I think it's a good investment. The market sentiment is on hold. This may be because of the fact that we still don't know what's coming out, and we need to have more details on that. Main Capital is also as GNC in the sector of diverse finance. In this case, they are on asset management and custody bank. This is a stock that I have for a long time, since the beginning. Dividend yield of 7.53% per year, and is being paid monthly. These are undervalued in 2.9%, has been an increase on the past months, and the acquisition of this stock is being quite high in the last few months, beside the fact that at the moment the market sentiment is on hold. The financial health, it's not the greatest, it's 1G only, because we have a slightest difference between the assets and the liabilities, which is around 2 billion between those two, and has been acquired by hedge funds. They're putting on their portfolio, and the market cap has been increasing in the past few months. It's a quite good stock with a high dividend yield, monthly payments, so I think we can find any better than this. So Main is one of the stocks that I have in my portfolio, as well as AGNC. So now I'm going to talk about 3 similar stocks, which is GLP, Global Partners. They pay quarterly and with a dividend yield of 10.98%. They are undervalued in 13%, which is quite good, beside the fact they've increased on the past month. This is due to the dividend yield. This is in the energy sector. And I have another one which is quite similar to this, which is ET. GLP, beside the fact of being at 10.9%, they have a really good financial health with the 2Gs. And comparing this with ET, I think I'll go for GLP at the moment. They have a lower market cap than ET, but this is a good stock to have. If you don't have ET, I could consider going for GLP, because it's one of the high dividend yields, and in terms of financial health, it's quite good. The market sentiment is on its hold, but this is due to the fact that it's an energy sector, and it has been having quite of a bit during the pandemic. ADP, Enterprise Products Partners, are quite similar as a GLP, although this has a different quarterly payments. This is in January, April, June, and September, which we could combine with GLP. Has a high dividend yield of 8.03%, but this also depends on your exposure to the energy sector. At the moment, my entire portfolio has a 15% of exposure to the energy, so it's quite high. This is one of the reasons why I'm not investing more on energy or this kind of companies. And I'm stick with the ET instead of going to GLP or EDP. Although if you don't have any exposure to energy, those two are quite good. ADP and GLP, you can combine them and receive almost every single month's payments. And with a high dividend yield, this is a 8.3% high dividend yield, as also a good financial health. Is 2G. We have the market sentiment is a strong high because we are facing almost of one of the all-time low, and the performance has been quite good in the past few years. And the ex-dividend date is on the 28th of January, so we have plenty of time if you buy it right now. PAGP or Plains GP Holdings, it's also one of the energy sectors, the same as GLP or EDP, although this has a smaller dividend yield and the financial health is quite lower. But I just put this because it's also one of the quarterly dividend payments with a high dividend yield for this week. And we have a market sentiment to buy because it's also on the all-time lows. This could be increased, but I don't see any increasing on the last few years. It's been quite stable, and the assets, comparing the assets with the liabilities, they have more liabilities than assets. I could consider this stock as a medium short-term investment. So let's talk about my portfolio performance. My portfolio has increased in 0.20%. Comparing with the US markets. I publish as well some comparisons with the index, which you can see on my Twitter or eToro accounts. And my portfolio has grown in the past week 15%, and since inception has grown 9%. This is quite good comparing the fact that the market went down this week. In terms of the 5 stocks, it's Apple, Facebook, Twitter, Microsoft, and broadband, with Apple and Facebook being the top leaders of 9.4% and 9.2%. This is because of the averaging that I've done on the Facebook and Twitter. That's why Twitter has increased in 6% this week due to that fact. And also because I've bought really low Twitter, and that's why we have an increase of 6% on this stock. And once again, if you want to copy my trades, you can do it by using eToro. You can use the spreadsheet that I'm going to leave on the description, where you can do some simulation and see how much you're going to win. Bear in mind that some transactions won't be copied if you copy me only with the $200. So regarding the spreadsheet, I'm going to mention 2 stocks that I've bought this week, which was HENC that I already mentioned in the beginning of the video, and also AMZA, which is an ETF, which is quite not an ETF due to the fact that they use leverage. So since it's one of the things that I don't want to use is leverage on my portfolio, but I have this ETF that does that, so we can have great gains here using this ETF. It's been performing quite well in the past years and has a high dividend yield of 22%, which is not quite correct. Actually, it's quite lower. It's around 15% roughly. And it's one of the ETFs that invest on the energy sector. So it has been beaten since the beginning of the pandemic, and this is a good time to buy because it's quite low comparing from the past years. And we can see this on the 5-year charts. At the moment is on the lowest, and I think it's a nice time to buy. Having in consideration this is a monthly dividend and pays around 15%. Although this can be a risky investment, I think this is one of those I need to have in my portfolio. Don't have too much of exposure, but I want to have higher risk, higher reward, and this is one of those that can give me that. I hope you enjoy the dividend stocks that I've mentioned this week. And once again, if you don't subscribe yet, please subscribe. I only have 1% of the people that seeing my videos are subscribers. The rest are not subscribers. Around 98% are not subscribers. So please give a like and smash that subscribe button because that's going to help me. So once again, guys, thank you and see you next week.